Hello and welcome to Startup Street. I'm Shruti Mishra and with me are Arundhati Ramanan and Ritu Singh. These are the top headlines from the startup space. Kirana Pro, a fully ONDC-integrated AI-powered quick commerce platform, has acquired Lyco, a startup specializing in augmented reality-powered virtual try-on technology. With this strategic move, Kirana Pro is bringing Lyco's immersive trial room experience directly into Black, a fashion-forward commerce platform built for Gen Z and tech-savvy shoppers.
OYO is gearing up for a pivotal investor engagement with SoftBank, its largest shareholder, as the company explores its long-anticipated public listing. Sources tell CNBC-TV18 that OYO has roped in a consortium of 5 investment banks to present IPO plans to SoftBank executives in London this June.
Ola Electric's net loss widened to 870 crore rupees during the March quarter compared to a net loss of 416 crore rupees during the same quarter last year. Revenue also declined by 62% from last year. However, for the June quarter, Ola Electric is expecting its adjusted revenue to grow between 23% to 31% from the previous quarter last year.
IVCA has called on legacy venture capital funds to promptly act on the SEBI's migration framework before July 19, 2025. The framework, introduced on August 19, 2024, offers a one-time window for venture capital funds operating under the now-repealed SEBI Regulations 1996 to transition into the more current AIF regime under a newly created subcategory known as migrated venture capital funds.
Top Flipkart executive Ankit Jain has joined Instamart as Senior Vice President. He will lead the quick commerce platform's end-to-end operations, including supply chain management, dark store operations, the delivery experience, as well as network expansion. Jain will take over from COO Sairam Krishnamurthy, who joined Instamart last August. Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. Quick service platform for on-demand home services, Snabbit, has raised $19 million in its Series B round, led by LightSpeed, with continued backing from Elevation Capital and Nexus Venture Partners. Now, this comes just 4 months after its $5.5 million Series A round, and the company now plans to expand to over 200 micro markets across metro cities in India in the next 9 months. Joining me now to talk about the road ahead is Ayush Agarwal, founder and CEO of Snabbit. Ayush, welcome to Startup Street. What gap in the market is Snabbit solving? If you could take us through your offerings. You've built a full stack model from training and sourcing to managing talent in-house, and that's quite operationally intensive, Ayush. So why not opt for a lighter platform-only approach like others in the gig economy?
Thank you. Thanks for having me, Shruti. I think the first question that you asked is, what is the problem that we're solving? Well, what we realized is that in today's world of convenience, you can very easily get a cab, or you can get food or groceries delivered in minutes at the tap of a button. But if you want any simple help at home, it's relatively very, very inconvenient. And that's a personal problem that I found multiple people were grappling with. And that's how we basically said that let's make it as simple to get home helps as simple as it is to probably book a cab or to order food. So I think we're basically India's first and the largest hyperlocal home services platform, and we're completely revolutionizing a space that has seen zero disruption over the last few decades. And the reason that we've gone full stack is because in the world, in the category of services, service quality is extremely important. Trust and safety is extremely important.
Yes.
And the only way to actually be able to ensure that we're able to provide quality service, a consistent service to our customers at scale, is by owning the entire supply chain.
Sure.
Hence basically the efforts on sourcing, training, and onboarding and full stack supply system.
Okay, so $19 million in Series B just 4 months after your Series A. What drove this rapid follow-up, and what made investors like Nexus and Elevation to double down so quickly? And also, Ayush, if you could take us through, how you plan to allocate this fresh capital.
Yeah, so we launched early last year, and we spent 12 months working out of just one micro market and basically perfecting the business model. We raised Series A once we were confident of the business model working, and we basically cracked playbooks on both the demand and supply side. What we've seen over the last 5 months has been unprecedented growth. So we've grown 5x in the last 4 months, and we've basically proven out the same business model across multiple micro markets. We launched Bangalore, we launched multiple clusters in Bombay as well, and we've seen really encouraging response. For example, it took us 150 days to get to 100 orders a day in Hawaii, which is our first micro market. but it took us just 8 days to get to the same milestone in Thane, which basically talks about the fact that we know that we're executing well, and we basically need to double down on this momentum, and hence we've basically gone out and raised more capital to fuel this expansion.
Okay. You know, Snabbit promises trained experts at your door within 10 minutes. How does the logistics of that actually work? And you have introduced a time-based pricing model. How has that shifted consumer behavior or expectations?
Yeah, so I think it's the entire supply chain management is about designing very efficient networks, which are based around dense neighborhood clusters, and then it's all about just very accurate demand prediction, so that you can actually place supply very close to demand. It's more of a network design and a demand prediction exercise, as opposed to a logistical issue. And I think the quick commerce infrastructure that's come up has obviously helped us in designing this very efficiently.
Sure. Ayush, you know, you're aiming to launch in 200 plus micro markets across top metros in India in just 9 months. First, tell us what makes you bullish on this aggressive scale up. And then if you could also talk to us about how do you view competition from legacy players or local networks? Is Snabbit's vision to be the Swiggy for services? If you could tell us what's your moat in such a high frequency, high trust category?
So I think the reason why we're very bullish on scaling this extremely rapidly, as I said, is because we've spent a lot of time just going very deep into the micro market that we launched in. We spent 12 months just operating out of one micro market, understanding the customer, understanding our experts, as we call them, and understanding what's really working, and also building a path to profitability. And then over the last 4 months, we've actually managed to replicate the same business model across multiple other clusters as well. That's the proof of execution is basically what is driving our momentum and our commitment into this category, to say that what we've done in 10 micro markets can be leveraged across 200 more.
Sure. One final question, and if you could quickly answer that, you know, you've said Snabbit is as much about speed for customers as it is about dignity for your workforce. If you could elaborate on the social architecture you're building, and as you scale across cities, how do you ensure consistency and quality across such a fragmented sector?
So I think the way we look at it is, we don't call them mates. We don't treat them as gig workers. This is a very different supply chain for us. We inherently internally address them as experts, ensure that they're dressed properly, focus a lot on training and sourcing. So I think just having a very different approach, which is not purely transactional across the value chain, is what drives this entire feeling. Because for the longest time, this entire cohort has been marginalized and operated in a very offline industry. So I think that's the way we're looking at it. And I think, I think the fact that we will be able to maintain the quality and consistency across is because we've spent a lot of time in building really cutting edge tech powered by artificial intelligence that can actually ensure that the same models can be leveraged across multiple micro markets.
All right. On that note, I'll have to wrap up our conversation. But Ayush, many thanks for your time. Appreciate you joining us on Startup.
Thank you so much, Shruti.
Moving on, manual finance ops might soon be a thing of the past thanks to a new AI-native platform that's automating everything from invoices to audits. Meet Hyperbots, a US-headquartered startup with roots in India that's raised $6.5 million to shake up mid-market finance teams. Now, the Series A round was co-led by Arkam and Athira Ventures, built by former insiders who've seen the pain points firsthand. The company is now rolling out AI co-pilots trained exclusively on finance data. Joining me now to discuss this further is Niyati Chaya, the co-founder of Hyperbots. Niyati, thank you so much for taking time out and being here with us on Startup Street. You know, before we get into the nitty-gritties of the fundraise, right, if you could sort of take us through the problem that you're trying to solve at Hyperbots, what's on offer, and what's the impact that you're trying to create here?
Sure. So Hyperbots is about 2 years old, and our goal is to automate end-to-end finance processes. There's a lot of manual work, a lot of analytical work, and we believe that AI and, in fact, the finance and accounting platform that we have built can extremely automate several of these processes end-to-end, and which is actually a gap in the market. So imagine, say, 80% of invoices going through touchless, or orders getting processed with no one touching it at all, maybe 80 to 85 of those out of 100. So the goal is to free up everyone in the CFO's office of the mundane repetitive tasks that they do, and replace that with the finance-specific agentic AI that we have built.
Right, and how does this agentic AI platform differ from traditional finance automation tools?
Just sheer focus on extreme high accuracy achieved by intelligence, which is modern age, trained only on finance data and focused only on finance data. So extreme high accuracy, achieving end-to-end business automation, and not being generic about it. So that's our USP.
So extremely focused is being the keyword there. But you've raised the $6.5 million for go-to-market efforts in the US to build new AI co-pilots for finance teams. And also that includes the launch of HyperLM, right? If you could sort of elaborate on your plans and how you plan to use these funds.
Sure. So the first 2 years or year and a half is where we focused on building the product. We worked with several CFOs in identifying, in fact, their problems, nailing down the PMF. The next stage now is about selling that, right? So our focus is to grow in the US markets. In fact, we are starting with the North America market and we'll then expand into other markets, expand the product itself. So right now we cater to procure to pay, which is an end-to-end process with the highest amount of manual work. We are building order to cash and expense processing, which are equivalently tedious from the finance perspective. And something that excites us the most is we are bringing in HyperLM, which is industry's first finance vertical specific LLM. Imagine a ChatGPT just for the finance folks and the CFOs. That's what we are building.
Right. And, can you tell us the kind of traction that you're seeing in terms of customer adoption, average deal sizes or growth metrics? Any plans to expand in the Indian market?
Absolutely. So let me give you a sense of a little bit in terms of numbers. The TAM for us is around 1 lakh companies. Penetration today, even within a small geo, is less than 5%. So the idea is to start bringing in that automation over there. Like I mentioned earlier, our way of selling is build the product first and then establish the PMF, which we have already achieved, and now start growing in terms of the revenue. Over the next year, we'll hit around 4 million in revenue. And definitely, we are looking at India market as the next step. In fact, we are already talking to several GCCs as being our partners, who both sell for customers in India and customers outside. Obviously, you have the banking sector, which can leverage Hyperbots for the several tasks that are happening over here.
And, speaking about automating all these tasks that, agentic AI can do, how do you, sort of foresee how agentic AI will transform the workplace? What does the future of work look like with agentic AI?
Yeah, that's very interesting. Let me share a vision from the CFO's office perspective. Imagine the CFO, instead of looking at the Excel or the accounts payable clerk, instead of doing anything manually, just logs in into a dashboard and maybe asks questions or has ready reports available to them to work with. So essentially one-stop shop place for them to do everything to do with finance. And this comes with a lot of customization. So what I mean by that is Hyperbots is where you can bring your own ERP, bring your own data, and we build on top of that. So it's not that you are asking enterprises to move completely away from what they are doing today. It's just that you are aiding them through the agentic AI piece to do it quickly and not like focus on the strategy rather than focus on kind of doing daily stuff.
All right, Niyati, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best going forward.
Thank you.
Well, on that note, it's time for us to head into a short break. But coming up next, EV maker Euler Motors raised 638 crore rupees in its Series D round. We put this founder on the hot seat to talk about the company's synergy with Hero MotoCorp, product roadmap, and what's next. Stay tuned.
Well, EV manufacturer Euler Motors has announced a successful closure of its Series D funding round, raising a total of 638 crore rupees. This fund infusion was led by Hero MotoCorp, along with participation from existing investor British International Investment. Now, that takes the company's total funds raised to date to about 1420 crore rupees, and the company says this latest infusion is going to be instrumental in expanding its sales and service network while advancing new product development to accelerate India's commercial EV adoption. On that note, let me bring in Saurav Kumar, who's the founder and CEO of Euler Motors, to understand how this capital is going to boost the company's growth and more. Saurav, thanks very much for your time here on CNBC-TV18. You've raised more than 1,400 crores, and now with this latest one, what specific expansion plans do you have, over the next 12 to 18 months, geographically, operationally, and in terms of production capacity with the money?
So first of all, thank you, Ritu, for having me on the show. Definitely having HMC and BI, they being the marquee investor, is a very strong confidence in what Euler is doing. This particular 638 crore that we are raising, this will primarily will be used in the retail expansion. We are already present in like roughly 40 cities. We would want to go to 100 cities by end of the year. In our revenue, we would want to at least grow by 2x or 100% from the last financial year to this year. And in terms of like, if you look at Euler, we are focused on the electric light commercial vehicle segment. So we'll continue our focus in the three-wheeler and the four-wheeler cargo segment.
This Hero MotoCorp is, of course, joined as a strategic investor, but beyond capital, what sort of synergies or collaborations are planned between Euler and Hero, whether that is technology, supply chain, or even distribution?
So, Hero MotoCorp is a leader in two-wheeler industry. They have been looking at the electric vehicle ecosystem over the last couple of years. They have made their own forays. They have made investment in other startups. I think this is an investor that has backed, entrepreneurs like me, and also have looked into the future mobility trend themselves and have made their own investment. So I think it would be wonderful to work with them. I believe that other than capital, we would be able to expand our synergy in terms of distribution or supply chain, and even look at some of the ecosystem opportunities.
What is the roadmap from here? How does this funding support your future R&D, and what's lined up in terms of products for you?
So we are looking to electrify the three-wheeler, four-wheeler product ecosystem in the country. We believe that in the next coming year, majority of this percentage of commercial vehicle will shift to EV, and Euler would be one of the top 3 players in these markets.
How do you plan to defend and grow your market share amid rising competition, both from startups and also from the traditional OEMs?
Three-wheeler cargo, when we entered in October of 2021, we had around like 4% market share, and majorly around Delhi market. Today, we have roughly 11 to 12% market share in the three-wheeler electric cargo. And in the next couple of, I would say, quarters and year, we would be expanding to almost like 300 to 400 touch points across the country. So that will have push our volume. So that will help us go from what we are today, let's just say a top 3, and at least make sure that when large percentage of the market shifts to EV, we continue being the top 3 player and take around 20% market share in some of these category. And something similar, if I'm looking now at as we have expanded to four-wheeler, which we announced the Storm EV last year, from January, when we have started shipping, we have seen the similar trajectory where in the cities that Euler sells, we typically take 20 to 13% market share. Let
me ask you then how close you are to profitability then with all these financial metrics that you're sharing. And also, after this flurry of fundraising you've had, is a potential IPO on the cards as well?
Okay, so in terms of profitability, I think next 3 to 4 years is where we are looking to make sure that we go from the material positive as a company to EBITDA neutral as a company. That's that's one of our single, I would say, fundamental line that we are pushing, is that instead of growth at all costs, to how do you make sure that you're sustainably growing the company. IPO is definitely, like, I think every founder, when you are building a company, being public and winning the trust of retail market is like one of the important milestone. It's definitely there. I think over the next couple of years, as we show our growth and also path to profitability, I think that will be something definitely within an Euler board that will be a topic that we'll chat about.
All right, Saurabh, we'll leave it at that. Thanks very much for joining us here on CNBC-TV18. It was a pleasure speaking with you.
And moving on, at the SelectUSA Investment Summit in Maryland, my colleague Aishwarya Anand caught up with Adam Phillips, the managing director at Athletes Innovate, with over 70 global investments. Adam shared why India is firmly on his radar, calling it a must for any serious investor. He spoke about the power of sports-led ventures, especially from India, expanding into the US. Take a look.
I want to understand from your portfolio, have you looked at investing into any Indian startup or is that conversation on the radar?
Yes, well, first of all, yes, absolutely. Have invested in 2, I think, Indian startups.
Okay.
Out of 72 investments, basically, I've made in the last couple of years, 2 of them have been in India. Probably about 25% of my whole portfolio is international for sure. I think if you're not investing in India, it's a problem because it's one of the fastest rising young populations in the world. So absolutely.
Another thing I wanted to understand with you is that you're also working very closely with athletes who are transitioning into entrepreneurship,
yes,
right?
Absolutely.
Now with sports tech and with the rise of sports tech that we are seeing, especially in the Indian market, I want to understand that how do you see founders from there tapping into the US market? What's the potential here, especially to get strategic capital?
I invest wherever sports makes a difference. So like the Indian market, especially when it comes to cricket, of course, kind of that's number one. So sports is so sticky in a way that's so great for so many different kinds of investments. So it doesn't have to just be tech. It can be CPG. It can be restaurants. It can be, it can be anything. Because the fandom from sports really sticks to those products and sticks to those businesses in a great way when it comes to investing.
Given your background in both law and innovation at US Dot, what regulatory frameworks are we talking about, especially in terms of foreign startups who are coming to set up their base here in the US, and especially we've seen a lot of Indian startups, they've set up their domicile here because fundraising in US is comparatively much easier than it is in India. So considering all of that, what is your take on that?
It's a great question. So when companies come into the United States, investors can be a little bit hesitant if they don't think that company's coming in to plant here. This is my advice to any company who's trying to go to any other country, including the United States. If they know you're building a legitimate piece of your business here that's big and investable, like there's no question they'll invest if there's traction. Like the traction overseas then really, really helps.
The funding winter is thawing a little bit. But the momentum is still not as it used to be. So tell me, where do you see the end of 2025? What pace do you see it picking up? And also, like if I have to, you told me you've made 2 investments in India. By the end of this year, what does your investment portfolio look like and how many more Indian startups are you evaluating at that time? And which sectors would they be from?
That's a great question. So I'm not currently vetting any. I should be vetting more. I want more. And my 2 investments were in logistics sector over in India. And I think that is a massive sector over there, massive potential for that sector. Because there's, just in terms of the people movement, the ability of in ways that are going to be really, really successful, I think. So, so what does it look like in terms of overall venture capital? I think that's a tough question right now. Honestly, 2 things I think are happening. Money is consolidating. I think, bigger funds are getting more money. So that usually means companies have a harder time getting access to that money because they don't have those connections to those bigger funds. So I think it is consolidating. And I think there's enough unrest in the world that people are a little scared right now to sort of spend their money, right? So people are worried that, the U.S. economy looks like it's sliding a little, and so people aren't cutting checks as fast. So I don't see 2025 thawing very much, if I'm honest. I think it will continue at pace. I don't think it's going to zero. I think it'll continue as it is, but slowing down a little bit into 2025. The hope is that we sort of flush all the uncertainty out of the system in 2025, and in 2026 and 7, it speeds back up.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.